Hi, I'm Mark from Property Ventures. Welcome to this week's New Zealand Property Podcast, where we interview the property expert around New Zealand.
Hi, I'm Mark Honeybone from Property Ventures, and welcome back to part 2 of the podcast, talking with Mark Revis and Craig Pickett from Christchurch. They're going to share with us today about the current project that they are doing in Christchurch. They're going to go through step by step on how to do a large project and the dealings of the council and so on that you might have during the process. After that, they're going to talk about the actual building itself and how it's a great opportunity for a few people that will be listening to this podcast. We really hope you enjoy the show. Okay, welcome back to part 2, talking to Craig Pickett and Mark Revis from Christchurch. Welcome back, lads.
G'day, Mark. How you going?
Good. Just to summarise what we talked over the first podcast last week, we spoke about Christchurch opportunities and the market down there, the earthquake recovery, and then Mark gave us a few tips on investing. What we were going to move on to tonight was to talk about why invest in Christchurch and talk about apartments in Christchurch, but probably the best way to actually to answer both those questions and go much further is Mark and Craig will talk about their current project they're doing at present on some apartments, or dual key apartments. So can you tell us about sort of why you started doing this, and specifics on how you got going and where you're at and where you're heading with it?
Yeah, sure. Well, look, about probably 9 months ago now, 9 months, a year ago, I was looking for opportunities in Christchurch around, what's been happening with the rebuild, and, specifically in the area I was in commercial, and there wasn't a huge amount of opportunities due to tenant demand, but there seemed to be a growing pressures in Christchurch around the housing supply, and a lot of housing supply, housing costs, rental prices. So after the earthquake, there was over 12,000 houses that were reduced, uninhabitable or rezoned. And specifically the central city, I think there was 45% of the available rentals in the central city have just dried up really overnight. So massive sort of pressure on housing around that, as well as these, the increase of people coming in that we talked about last time, that changing demographic of the ages of the people that are coming in, all related to this rebuild, which is going to go on, quite possibly for the next 15 years. So a lot of pressures around housing. That sort of resulted in a lot of inflation, and there's been some really strong growth rates in Christchurch, and I think that's predicted to continue. I think the figures are around 7 to 10% per annum. So very strong growth in properties, and that's around the increase in rental prices. I think some figures are sort of over 30% increase in rentals over the last couple of years, and that's really without getting into what Mark mentioned last time around that short-term rental market, which was a new sort of market that came in. There was also, from a regulatory perspective, the council and SERA and a government entity called the Central City Development Unit here in Christchurch have put in place some pretty challenging, pretty ambitious goals for the central city of Christchurch. So, and also starting to give some incentives to developers around building in the central city. Some of the challenges that have been around building is that the cost of building has just gone up so horrendously, really, here in Christchurch. A lot of that building that's happened has been funded from insurance money, and therefore the actual economics and the feasibility of rebuilding, well, it hasn't been a consequence really, because it's insurance money. So when you're coming to a greenfield development and you've got developers trying to build a product for a market price, the build cost was so high. So one of the incentives that the council's done here in Christchurch is to give a rebate on what they call a development contribution, which could be quite a considerable amount, and really trying to stimulate housing and redevelopment in the central city. So I think putting those all together, I sort of thought, well, the opportunity's got to be in-town living, in-town apartments within the 4 avenues of Christchurch, and focusing on that as a market to, as a product to present. I think there's some great, for me as well, being from Christchurch, some, it's quite close to the heart, I suppose, rebuilding the city, and I think getting people into the city by providing, really good quality, funky, stylish apartments. I'm sort of mid-30s and don't have any kids or anything as yet. So, apartments for me is that apartment sort of living is attractive to me as well. So I'm sort of thinking, well, how do I want to live in Christchurch? So all that sort of came together, and I suppose that came up with the idea of, okay, well, let's get into some apartments. And then I really blended that with my previous experience on, preparing cash flow properties for investors. So coming up with a bit of a concept around that dual key, which isn't that prolific here in Christchurch. There's a couple of examples, but not as much as Wellington or Auckland. So using that as the basis of a design that really can to increase the returns for investors, and also I suppose that product suiting the rental market down here at the moment, where you've got a lot of professionals from out of town, some working here Monday to Friday, then leaving. Others young couples, young people, young professionals, and they're all sort of wanting to live in an apartment. But it'd be a great that flexibility that the dual key offers investors. So it all sort of came around to an idea really that we have then pursued, Mark, and pursued through initially finding a site that was located, very central and close by some of these key anchor projects that the government and the CERA have come up with in their master plan. So focusing on a really good location for these, and then getting that site under contract with a due diligence clause, quite a lengthy and specific due diligence clause. And I'm not sure. Maybe do we want to go into a bit of detail on that for people, Mark? Do you think they'd find that?
Yeah. So it's probably just in terms of the theory, but and putting some of the theory into practice. People talk about and buying investment property and having long lead-in times to, whether that be to get access early or to do more research into whether a project's viable or not. And so we negotiated with the vendor of that property terms that involved geotechnical requirements, because they didn't have any geotech on the property.
Yep.
So we engaged a geotech engineer to get those reports, and so we had a time frame in our due diligence for that. Once we'd got that geotechnical assessment, we could then sort of establish what the costs were and the solution from a foundation point of view, with structural engineers and with geotech engineers. So we went through a financial feasibility at a sort of a high level at that stage.
I mean, the costs could be 100% different depending on what's under the ground. I mean, you've had another example which was just horrendous, wasn't it, for that site out in Kaipoi, was it?
Yeah. And look, the geotech can vary significantly. For example, there's some sites that could be 100 metres away from each other, and some have had to pile down 20 metres and others only have to go down 7 metres, and the cost of that groundwork can be significant and has a massive impact on what you should be paying for the land value. So that's all part of the due diligence process. That if you're looking at those opportunities, especially in Christchurch, given the risks associated with wanting to build something and having to use a number of consultants to engineer and design that, you need to be pretty clear as to what is actually required. The next part of the due diligence involved getting concept design done, and then we ran that past the vendors of the property just to show them what that looked like, because they still had an attachment to that property and wanted to know what was going to go on there was met with their requirements, even though it wasn't necessarily about them, but they wanted to have some input into that, and so that was good in terms of developing the relationship we had with them.
I think it's always positive if you're ever doing due diligence clauses, and especially if they're potentially lengthy due diligence clauses, is to keep it very transparent and go map out the process, map out what you need to achieve, and then discuss that quite openly with the vendor, and then have milestones and don't have just one due diligence clause, break it up into 5 or 6 milestones that you can confirm, and you can, maybe it's a 20 working days to do a geotech. At the end of that, you get your geotech report back. You then can tick that box, go and meet with the vendor, discuss through it, and then they get sort of led on that journey, and they become part of the project almost as well. Often they're in a position, they're selling the land because they don't want to do the project themselves. So it really engages them and allows you to develop a good trusting relationship with the vendor, which then moving on can be really powerful.
Yeah.
Great tip.
Yeah. So then we got our concept design completed. Then with that, we went sort of in hand to the council.
Yep.
To get some feedback from them, and Sarah, which is the government department, and our planners, and we looked at the various non-compliances with the zoning rules of the site, and got a level of confidence or lack of confidence in terms of what we were trying to do, and then the next step after that was finalising a plan and going through what's called the urban design panel. So the urban design panel is a panel that the council puts together. It's a no cost service, but pretty much every project inside the 4 AVs has to go through urban design. And on that panel, there's an architect, there's a planner, there's an urban designer, there's a landscape architect. Yeah. And there's a couple other people.
Yeah, commercial. Yeah.
And effectively, they have a look at what's designed, what's proposed, and they critique that, provide feedback, and then they issue a letter with their combined thoughts on the project, and then it's, up to, depending on what those comments are, whether you go back to the drawing board again and start again, or whether you amend the plan, depending upon the level of, support that you get. And we were pleasantly surprised that the changes that were proposed were quite minimal, and so that there was a lot of support from the urban design panel, which I think gave us confidence that we're on the right track as well.
Yeah. I think there's a key there in dealing with the councils, and people have, there's nightmare stories, there's many stories, there's enough nightmare stories around, but it was a real key of early engagement with council, and any of those government agencies here as a stakeholder to the project. And what we did was look at the context of the city, look at the plan that they had presented, and aligned our project with that. So when we actually came down to some of the Resource Management Act planning around the site, we were actually able to push through that and really push the boundaries of that the plan. But it was in a direction that was aligned with what council were wanting, and at the moment, obviously, the in-town living in and around that sort of that frame and that central city. So, I mean, for example, this site had an 8-metre height restriction on it, and we've pushed through that. We've gone to 4 stories, so we're at about 12, I think. The site is a residential site, so there's no mixed-use opportunities or commercial, tenancies on that. However, we've managed to put a cafe in with the apartments, something that we were questioning whether we could do it as well. But again, it was very much aligned with what the council were wanting to see in that that amenity for those the tenants, for the residents. So I think it's a really good lesson to learn from, or that we've learned and through that process is, that the council were really, really helpful. And I think we had a resource consent in and out of council in 12 days, which could well be a record for Christchurch City Council.
Be a record anywhere.
I know, yeah. And but that was simply through that early engagement and speaking with planners, and then with that urban design panel. There wasn't a great deal of feedback, but we I suppose made them feel understood and listened to. Yeah. And we responded to each one of their concerns, and from that, when we spoke to them later before actually putting the consent in, they were like, "Well, these guys have actually answered everything that we've raised," and so therefore it became a very streamlined process.
Yeah. So and then the next step after urban design was, well, we did make some changes, and then lodged resource consent, and as Craig said, that came out within 12 or 13 days. And probably the key lesson out of that was really driving the consultants, driving the council, and sort of taking charge and managing the various consultants and people, not letting them have a bit of a free rein. And we were quite concerned at the start when the planner that we'd been working with, the council said, "Oh, we're actually going to put another planner on to manage your consent." And we thought, "Oh no, geez, they're going to have to reinvent the wheel again."
Yeah.
But that person, because we'd had a lot of engagement with them, briefed the other planner on it, and it went through quite quickly. And there were a couple of issues that cropped up, but we got for example, the landscape architect got on to speaking to their landscape person, and it got resolved, so therefore it didn't hold anything up in terms of the issue of the resource consent. So that again comes back to driving the project forward and taking control of it, even when it isn't at council, and you're trying to get consents out. The next part of our due diligence, once we'd achieved that, was going through to get building consent. We had the resource consent, and then we had, a final due diligence period to arrange final matters such as building consent, financing in terms of getting sales and that sort of stuff, to know that the project was going to be a goer and was going to be viable. Yeah. So it was quite an in-depth process over the space of, call it 8 months.
Yeah.
But, as Craig said earlier, I think a valuable lesson for people is that if you put those milestones in and you get your vendor to buy into that, they can understand that you're working on it all the time rather than just having one big long due diligence period.
Yeah. Yep.
And if you engage with them and you engage with the councils, and that, it does make the process move quicker. And I think at the end of the day, you'll be more successful in getting what you want, not what the council wants, out of from what the project design actually is.
Well, I mean, on that vendor, on those diligence clauses as well, if you say you're going to do something, and you do it, and then you say you're going to do the next thing, and you do it. By about the third time, the vendor starts to trust you.
Yeah.
So that when you come back, and maybe the fourth time, and you're in a position where you need an extension, or something hasn't gone right, you're showing that it's transparent. They trust you, and therefore they believe you. There's no arguments about it, and they go, okay, well, we can see that you've done everything you've said you've done. We can see that you're doing everything correctly. Problems happen. We understand that, and therefore we're willing to grant you some more time or be more cooperative. So, what else was the sort of other things?
Yeah, so there's some good lessons in that. Yeah.
Absolutely. That's great. Yes. So let's tell us about the apartments. So what did you end up building and why?
Well, we haven't built anything yet, Mark. So the design is a combination of 3 and 4 story apartment blocks, and so within the project there are 3 blocks. A north, west, and south block, and they're all single level 2-bedroom dual key apartments. So they can be either a 2-bedroom unit, they can be a 1-bedroom and a studio, and there's a common lift. And some people may want to, with the professionals coming to town, they may want to live in one side and have the other side as their office.
Yeah.
So
one of the other keys on the ladder, the apartments. I mean, it did take. We went round in circles a bit on it, Mark, and the architect did get a bit frustrated, but we put them through. But I mean, just trying to get that really efficient and the best design. And I've lived in a couple of apartments myself in Christchurch, and know, for example, the importance of getting a good northern or western aspect to your apartments and getting that sun. Also, apartments 70 square metres or less, having good outdoor balcony space, I found was something that was really important. So being able to have a design that the 1-bedroom and the studio are both facing the north or the west with a 2-metre deep balcony, I think was something quite important to get that around there. And then I suppose the overall building as well. You were going on about just for the elevator, including
elevator? So we've got an elevator in there which services the majority of the apartments, and on-site car parking. So every unit has an on-site car park, and then some storage areas for the residents as well to store their other, like the golf clubs and bikes and surfboards and those sorts of things. So we've really tried to get the design fitting with making the unit giving you the unit flexibility in terms of how an owner might want to use it, whether it be an investor or an owner-occupier. You could have the situation where you have an owner-occupier wants to live in the studio unit because that's all they need, and they can rent out the 1-bedroom apartment and get a good rental for that, and that subsidises the rent, so therefore the property becomes much more affordable to them. So looking at that flexibility, multiple income streams. So that's been, I guess, the thought in terms of how we've tried to package the project to provide those opportunities for purchasers.
Well, I mean, ultimately, it's trying to achieve a positive cash flow investment these days can be quite challenging. And you've got those sort of, a lot of investments that are being sold in Christchurch residential houses that are 5% yields, 5.5% yields, and just from my background and property investing and that sort of philosophy, I struggle to get my head around the point of that. I mean, unless you're getting some great capital gains, but is that guaranteed long term? There's a lot of debates around that. So thinking, how can you actually configure a unit to get a yield that's maximize yield? I mean, I think really getting above 8%. I think I spoke to you, Mark, right at the start and said, what sort of some key key goal points as far as investors and what they want? Is it still the same? Compared back to pre-2008. I think you said 8%. Get it over 8% and get some maybe some discount off valuation.
Yeah, and I'll just jump in there, and to the Mark and Craig's credit, they did. They come to me several months ago and said, what would investors want? And I said, well, it has to be that 8% yield plus. I think you've even got some sort of close to 9% here. And then you chuck in the chattels depreciation. That's a pretty good investment. And the other thing I said to them too, which they've really listened to, is said you have to get close to 10% discount. That takes away any risk factor. It also lets you move on to your next project sooner. It's that they've done this for these projects. So I'll let you carry on.
That's right as well. And I've always had a belief in a win-win, and not keeping everything yourself, giving something for the next person, and it means as you said, we can for us as a developer, we can sell these units off the plan, get them built, get on to the next ones, and it's really that velocity of money and getting through and building more units that suit it. So leave 10% equity in that off valuation. Give them configure them in a way that get that cash flow. So it's just, I certainly buy into that philosophy. And I think Mark is an accountant as well. I think there's some advantages to the being brand new, buying off the plans and whatnot. I think probably Mark, we've got two Marks here, but Mark Honeybone as well. I think there's some. I think you told me about the 10% lending on off the plan developments before they start building on site. So there's some advantages around being off the plans and new as well. Mark Revis here with the accountant with the depreciation and that off chattels and whatnot.
Yeah.
Yeah.
And the other thing is that I see that the opportunity with this project is that people want to get into there's a lot of hype around the Christchurch market, and there aren't necessarily a lot of opportunities that people can get in and invest in properties in Christchurch and get that sort of yield. So we have tailored it for not only Christchurch investors but other people that want to maybe expand their investment horizons to other places around the country as well. So there's certainly the opportunity to do that. And as we'd said in the previous podcast, and Craig might have elaborated on, with the number of people coming into Christchurch, people being out of their houses on a temporary basis, professionals coming into town during the week, that we're confident that there is going to be good rental demand for a good level of time going forward, and. Yeah, so it's an exciting project from Craig and my perspective, and something which I think we're quite proud of. I guess playing our part in trying in assisting Christchurch with the rebuild and getting that vitality back into that central city and providing a good livable environment for people.
Yeah, and I think it's keyed with the infrastructure as well that's coming on too, isn't it, around that area?
Yeah.
I was just going to ask that. Tell us just briefly about the area. I mean, I was on site on last Friday and seeing how close it was to the city and Latimer Square and seeing all the other projects going on in the area gave me sort of great confidence moving ahead. If you own one of these, so why that area in particular?
Well, look, it's bordering on that east frame, and I think Mark might have said that there's a massive Margaret Mayhew playground which is about to get underway very shortly. I think it's due for completion at the when is it? Or is that the? Yeah, no, that's the Avon River. I'm not. It's about to be constructed. The Margaret Mayhew one's about to start. It's not going to be a great time.
And that's time. So that's got within 100 metres of the site.
Yep. The key one really is to the south of the site. Is what Sarah and the government have put through is the residential demonstration project is what they've called it. So they've gone out and done a design competition for a residential apartment development. I think they had Kevin McLeod off Grand Designs sit as the head judge to judge some submissions. And I believe there's about 106 apartments going in there as well. And so that's right next door to where we are. There's also been some apartments, probably another 200 metres away near to the north, which have recently been completed. And I mean that's right beside this area. But I mean, you've got all those sort of key projects, and as you said, Mark, the actual site's probably about 500 metres from the Cathedral Square.
Yeah.
So we're smack bang in the centre.
You're a K from the stadium, well, whenever that gets built.
Yep.
You're a K or so away. So you can walk or bike into town, and the beautifying the Avon River, so there'll be a lot more walking and biking tracks around the Avon. So accessibility with all that is going to be quite fantastic. So people aren't necessarily going to use their cars as much. You've got the convention centre, which is half a K or so away. Same with the Performing Arts Precinct, which is the old town hall and James Hay Theatre and those areas there. There's the Les Mills gym. Les Mills gym is only half a K away. So there's a lot of infrastructure and new projects that are going to be in that area. And so, and the other thing is, looking west, you've got this green frame between Madras and Manchester Street, which over time, the government's bought all the land in that area there. What it's going to do with it, we'll wait and see. But there's going to be a lot of green space in there, so it's going to be a bit like if you lived on Park Terrace overlooking Hagley Park. You're going to have a lot of green space right across the road. So it's quite from our point of view, it's a good location given its proximity to all of those various projects that are going to happen over the next few years. So
and I think it's a good time for investors as well to get in, and not quite at ground zero, but at the start. This is in 3 or 4 years' time. It's going to be a lot more established with these with the infrastructure, and unfortunately, you're going to pay more for it, aren't you? Ultimately,
Absolutely. Well, this has ended up a pretty good sort of 2-in-1 podcast here. We've gone through the processes on doing a large development or project, how to build an apartment block, the lessons learned. Craig's given a few good hints on due diligence during not only a large project, but even a smaller project, I guess. And for us, it's been an intro to the exciting project that Property Ventures are involved with in selling. We don't jump on any deals that are available. We turn a lot away. We at Property Ventures legitimately see these as a great opportunity. I personally think the CBD property in the future are going to have big price tags on them, as we spoke about in the last podcast. So I see these as a great growth in these from the purchase price. So just finishing up there, thanks for your time tonight and for the first podcast, guys, and all the best on this great opportunity.
Thanks, Mark. No, it's we're excited about how it's all going to pan out, and thanks for your time.
Cheers, Mark.
Great, thanks. I'd like to thank Mark and Craig sharing with us in this podcast right down to the nuts and bolts on how to do a project of this size and scale. If you want to get hold of Mark or Craig, you can at 4avenuesproperty.co.nz. If you have interest in purchasing one of these apartments, you can contact Mark at propertyventures.co.nz, or just go to propertyventures.co.nz and you can click on the project and contact us from there. We hope you enjoyed the show.